Okay, MegaWhale team, welcome back to the channel, guys. Thanks for tuning into today's video. We have a very important chart to be looking at today, which is the current chart you're seeing on the screen right now, our symmetrical triangle formation. This is quite an important symmetrical triangle formation because not only is it, in a specific scenario where Bitcoin is, on the verge of basically falling to a new low, but it's overlaid over some major horizontal triggers. And these major horizontal triggers we talked about in the video the other day, which were these red lines and these green lines. The red lines indicating strong triggers or incredibly major triggers, and the green lines indicating weaker triggers. So we're in a very important spot. We're going to be talking about this chart today. We're going to give you the rundown of the chart. We'll talk about where we think the price is heading and what targets will actually result in any directional break. We'll be talking about Bitcoin dominance, total cryptocurrency market cap, and of course the macro chart and the weekly close. Before you get into it, guys, head down to the pinned comment. It takes 1 second. Head down to the pinned comment, click the link, join our Telegram channel, access to all of this stuff over here, updates, analysis, videos, charts, potential trade signals, and even more. If you're interested in our VIP channel, you can see the VIP channel over here. We have all of our updates, analysis, and much more. Nearly 500 members in there. We have our scalp trading chat over here. You get all of this stuff as a VIP member, and you can see our trading results for this month alone: 24 wins, 7 losses, and obviously you can find out all the information here. Clicking the links, you can see our month-to-month results over here. Absolutely huge. Never had a negative month. Let's go ahead and get into the video. So what you can see here is Bitcoin and a symmetrical triangle. Now, for those of you who don't know what a symmetrical triangle is, we'll quickly run it through it. It is essentially a pennant. The only difference between a symmetrical triangle and a pennant is two things: the amount of retests or the amount of trend touches, and number two, which is the length. So the retest, the amount of trend touches, and the length. Generally, pennants also have larger flagpoles, but in this instance, it's definitely not a pennant because we definitely do not have that large flagpole. We have a very small entry pole into this structure. So we have 5 retests along the top side. We have 4 retests along the bottom side. The retests on the top sides are creating lower highs. The retests on the bottom sides are creating higher lows, indicating we have a downward sloping trend and an upward sloping trend converging. This is very indicative of a symmetrical triangle, and it is the main characteristic we're looking for when identifying these structures. The second thing we look at here is the entry angle, or the direction of entry into this structure. As you can see, we have this slow and very slight uptrend nonetheless into the structure. And generally the direction of which we enter the structure on is actually the direction we usually, and I say usually because it doesn't massively increase the odds because it is a neutral pattern. This is a sideways consolidation, meaning it can go both ways, but usually the entry or direction that we take into the structure, we have a slight advantage or a slightly higher probability of actually exiting the structure in that same direction, as momentum usually follows through and carries through in these structures. I've seen it multiple times in the past. It is about a 13% higher chance, if you're looking at 50-50 odds, about a 13% higher chance, about 63% chance we actually continue upwards here. So nothing significant. If you're looking at other structures, 63 is quite low in terms of breakout percentage, but nevertheless it is a slight advantage. So that is something we have to look at because you want to play with the odds essentially, particularly when you're trading or scalp trading. So let's talk about a few things, and obviously we want to talk about our breakout targets from this first. Then we'll talk about our trigger levels, because these are not acting as triggers, but they're also acting as horizontal resistances. So first, let's talk about our breakout target. Well, obviously, if we take a symmetrical triangle, our measured move is quite large. It's 10%. To the upside, a 10% breakout target, say, for example, we break out over here. This takes us all the way to 21,000. All right, huge. We talked about 21,000 in the other video. And to the downside, if we break out, this takes us all the way down to about 16,800. And we actually talked about 16,500 in the video the other day as a potential scam week. When we're talking about that for a very long time, it is still a potential if this breaks down. But if you've been following the channel, if you've been understanding what we've been talking about, if you've done a trading course perhaps, you would know that measured moves don't tell us the precise target. They tell us a direction and range of which we can expect the price to move within. Generally, the price will move uninterrupted going at that direction, targeting the measured move target, but it will move until it reaches support or resistance. Similar to the law of physics, inertia, an object will move until it meets a force that essentially stops it, essentially, okay? Or I think that is, I can't remember, I haven't done physics for a long time, but you get what I mean. So essentially when we break out of these structures, this pressure cooker essentially had this large amount of momentum compelling us upwards, will generally continue until we meet the next point of resistance. If we break that point of resistance, we then continue to the next one, and so on and so forth. That's generally what happens. And we can say that our measured move target all the way is up at 21,000. Our first initial target should theoretically and realistically be at 19,469, 67, depending on how zoomed in we are. So that is what we're looking at. A break up out of this symmetrical triangle, we are looking at a target of this green line. And if you watched the other video, which was yesterday or the day before, you would know that this green line is also a weak, long bullish trigger, meaning that if we are able to get above this level and find some support and close this level, we are taking some more longs at this level. The major level will send us up here. This is our major trigger. As you can see, a lot of resistance, a lot of retest at this level. We can see that if we break above this level, we are more than likely to head upwards to 21,000, okay? And we say this is a major trigger because we take major positions once that trigger breaks, okay? On the downside, if we break downwards, we can see we are finding support. Symmetrical triangle is looking absolutely phenomenal. This is such a beautiful pattern, guys. It's a very obvious pattern. It's one of those patterns that you see and it's just absolutely perfect. You don't see patterns like this often. Usually there are a lot of scam wicks. We've only had a few on this one. A lot of, hard to find angles, a lot of hard to find trends. This one's a very clean pattern. It's a very nice one to be trading in. If you're scalp trading, swing trading, no, you don't want to be swing trading this, but scalp trading is good. So we're looking for a break below, and I would like to see an hourly close below this green line to indicate the fact that we have broken the structure, and to confirm the fact that the structure is lost, we need to see either another hourly close below this green line or a push up and retest and then loss of that first initial low. That will confirm the structure is broken. Either that point here or this point here, depending on what happens, will be your entry for your shorts. You're looking for a target of this trend line. Exactly the same thing. We flip the chart, guys. We know exactly the same thing is going on. We lose this level. We are pushing up to that next major support, which is sitting at the absolute bottom, which is 17,600. That will take us up here. Okay, so it's exactly the same thing. If we flip the chart, we can see exactly what is going on there. Very interesting, guys. I hope that makes sense so far. I hope it's giving you a little bit of a rundown of what's happening on the hourly chart and the larger time frame. This is about a week. This spans over the last week we've been in this structure. But let's go ahead and jump in. I'm just going to go ahead and delete these to an even smaller time frame. Let's go 15 minutes and let's see what's happening over here. So on the 15-minute chart, and as you can see, we've got a lot of volatility. There's been a lot of volatility. If you look at the last even 24 hours, 12 hours, look at this range over here. We're up and down, nearly a whole percent over and over, 1, 2, 3, 4, 5 times now we've gone up a percent, down a percent, up a percent, down a percent. And it's shaking a lot of people out. That's definitely for sure, especially, high leverage positions. A lot of people getting shooken out over here. And, this is a situation where I would more or less be patient. I'd be taking a lower leverage, less than 100%. I'd be taking a leverage long that enables me to hold up until this bottom and potentially slightly lower than this level, particularly this 18,700 level. I'd want to be a little bit underneath that level there personally for my stop loss. Just because we're seeing, this level not previously hold. And that is what I'd be looking at right now. I'd expect, if we do come down here again, we continue to hold this level, and support is support until it's not. More likely than not, we continue upwards. But again, if we do continue downwards, we do have those short-term targets. We have those triggers. We have those levels we're looking out for. Nothing is really up over here, leaving us confused. We know exactly where we're looking for, what we're looking for. It's really just this concave, this apex of these patterns that become a little bit sketchy. It becomes to a point where, these moves are shorter and they're quicker and they're more volatile. So it becomes much harder to actually start thinking exactly where I'm going to actually hit these levels. Exactly, so my doorbell's going up and I'm just going to ignore it. Exactly what levels we're going for, exactly where we're going to be breaking out to, exactly where you should be buying. On these larger swings, it's more obvious. We've had this massive push upwards. We've had this retest and rejection over here. The risk return on your short is more favorable. It is more likely. It is more probable. It is an easier trade to hold in comparison to buying a long down over here or selling a short over here. Your risk return is not as favorable. unless you're expanding that to your breakout targets. Anyway, let's go ahead and talk about Bitcoin, particularly the weekly close. So a lot of people talking about the weekly close, and guys, we've had probably the worst weekly close on Bitcoin since we've had, since 2020, December 2020. And the reason I say that is because we've closed the weekly candle, underneath this major horizontal support. And this support zone was 19,000 to 17,600, which was the absolute bottom over here. And that bottom, lines up with this level here. We line up with our support, there's a range between. And we've closed our first weekly candle in that level. And that really isn't a massive deal. I'm not too concerned because, like I said, we are in a symmetrical triangle formation and we do have that bullish momentum. We're potentially moving upwards. We haven't lost any major triggers on our momentums, on our RSI. So it's not too bad. But what would be bad if during this week, we do not get this candle back above this $19,000 level. Now, if we close this candle within this level again, now that would be bearish. To me, that would be bad. I'll give you a reason. Because this pattern here extends to the 27th of September, which is only 2 days, or day and a half, or a day, which means we do need to break this pattern within the next 24 hours, essentially. And determining where we break, or the direction of which we break, will determine the direction. So we essentially are going to know if this weekly candle, we're going to have a good indication at least of whether or not this weekly candle will remain in this level and close within this level, or break upwards based on what happens on this symmetrical triangle. So that's what I've been saying. Very important structure, something to keep an eye on. A very, very relevant structure on the chart right now, and something that we do not want to be ignoring is this symmetrical triangle, because it's going to essentially tell us what's going to happen. And then these triggers are going to tell us if we got this momentum to continue whatever trend actually develops from the breakout or breakdown of this triangle. So looking at that, guys, obviously that's something to keep an eye on. Closing below this obviously is never a very good idea. It's never a very safe idea. Not really what we're looking out for. If we push it out to the daily chart over here, or even the 2-day, doesn't really matter. We'll go to a daily though. We can see what's actually happening on the larger time frame. We have this sideways consolidation, very obvious sideways consolidation. You can even see that symmetrical triangle on this 1-day chart. A little bit smaller though, but you can see it over here. Sideways consolidation within this range. Obviously, we are pushing close to this downward sloping resistance. We have 2 downward sloping resistances over here. I'm just going to go ahead and get rid of that one temporarily. We have our descending channel, and obviously our descending channel expands quite some time now until the end of the year. And then we have our descending wedge resistance, which you can see expands, up until I think the end of this month, or maybe even the start of October. So we've expanded from the current price range. It takes us to about 11th of October. And I did say in a few videos ago, we've got essentially 3 weeks. We've got essentially 3 weeks to break this descending trend line, or we are going lower. And I think I said that about a week ago now. So it's about 3 weeks, maybe a little bit less, 2 weeks now. This is the 14th, 13th of October, to break this descending trend line, or we most likely get hammered lower. Because if we push sideways and hit this and don't break it, we go down. We go down. It's as simple as that. So it is running a little bit thin here for the bulls, for this downward trending resistance, for this trend. And now we've got the price within this horizontal resistance range. We've got this symmetrical triangle forming, we've got downward sloping resistance coming in. It is getting to crunch time essentially. Bitcoin will have to make another directional decision soon. We can't just keep going sideways. Essentially just been going sideways, scam pump up over here, just sideways for the last essentially nearly 4 weeks. Nearly 4 weeks of sideways of price action on the larger time frame, which is pretty phenomenal, to be honest, particularly considering where we are. And it does go to show the strength of this support line. It goes to show the significance of this support line. It's not going to be lost easily, but when it is lost, it's not going to be pretty. And that's essentially what we've been warning you guys about for the last few months, since June, essentially. This trend line here, the support zone, is a very significant one that we do not want to be doubting, one that we do not want to be fading, one that we have to understand the significance and relevance of. But if we don't, we're going to be catching ourselves on the wrong side of whatever direction this trend decides to take us. So let's go ahead and take a look at Bitcoin dominance. Bitcoin dominance miraculously found support. I didn't expect that. I honestly thought Bitcoin dominance would have actually dropped a little bit here and broken through. And look at that. It's actually found a little bit of support. pretty interesting. What can we have here? Can we even have a symmetrical triangle formation again? Maybe we have some sort of uptrending formation over here. Maybe Bitcoin dominance retests this upper range again. That would be quite interesting. If we do, we'll have to wait and see. Not too interested in the short-term moves on Bitcoin dominance right now, to be honest. The reality is we rejected from this range. We have headed down. Let's see if it's got the momentum to push upwards through this range. Until we break through this range, I've got not a lot of interest. For now, I do expect that to continue downwards. Total cryptocurrency markup, another very interesting one. And you may be looking at this and thinking, whoa, this looks so similar to Ethereum. And it really does. It looks really similar to Ethereum, especially this section over here, this head and shoulder pattern over here, inverted head and shoulder pattern. But essentially we've come down, guys. We've found some support over here. We have that major support line here, which we've indicated to be that major trigger on Bitcoin. So of course, if total cryptocurrency market cap comes down to this level, well, Bitcoin would have broken down from a symmetrical triangle. It would have lost that short-term minor trigger, which is sitting at, 18,700, and it'd be coming up to either losing or retesting this trigger zone over here. So total cryptocurrency market cap right now is looking neutral again. Symmetrical triangle formation is replicating Bitcoin's price action closely, not exactly. It is 41% dominant, but closely. So another thing that's telling us this is probably not a good thing is the fact that we do have potential, triangle formation over descending triangle formation. Descending triangle formations are when we have a neutral horizontal bottom and lower high has been printed. Obviously, this more likely to continue downwards. So something to keep in mind there, guys. But obviously, again, nothing to worry about yet. While we're in ranges, while we're above support, support should be treated as support until it is no longer support. Simple as that. Bitcoin dominance, Bitcoin, total cryptocurrency market cap, all that stuff they're not drivers of price action. They're merely indications of what is happening, and what is happening can change, and therefore what is represented by those charts can change as well. So we're not too caught up on looking at every single little movement on a Bitcoin dominance chart or a total cryptocurrency market cap. We're more looking at levels. We're more looking at the levels. Okay, the macro chart, guys. Another weekly close underneath the major uptrending 9-year support line. Obviously, this is not a good thing, but at the same time, guys, we've said already, it is not about holding this trend line anymore. It is not about holding this trend line. It is about holding this level. Because as long as we hold this level, the price can reclaim that trend line. Okay? As long as we hold this level, the price can reclaim that trend line. If we lose that level, that is when we continue downwards to that 12,000, 13,000 range. Now, I'm going to go ahead and expand the RSI for a second. You can see a few important levels. Specifically, what we've got over here is 32.60. 32.60 is a very important trigger for momentum on this chart. And we talked about why before. And the reason why is because every time we lose this 32.60, we see big crashes on the weekly chart. We saw about 25 to 40% average crash on the weekly chart from losing this level on the weekly. And we can't just drop below it. We have to close below it to be lost. Okay, so keep that in mind. On that breakdown, the moment of breakdown below that level, from that point to the close of that weekly candle is where we expect that crash to occur. Okay, keep that in mind. From the loss of our level to the close of that weekly candle, over a 2-day or 1-day period, is where we expect that crash to initiate and occur. It can, however, drop below, fake out, continue back upwards, and then eliminate the drop on that RSI. Hence why the weekly close is important for the RSI, because for that data point to be locked in, it has to be closed. If you think about this is like the RSI, sorry, I'll actually bring out my texter. You got the RSI weekly close, and then it can like pivot from that point, right? It can pivot from that point. So none of these pivots are actually relevant on the weekly chart until we lock in another pivot. And then we have that weekly pivot. And now this line can no longer be adjusted. And then we have pivots again, okay? And then we lock in the weekly. And then say we lock in that weekly, then we pivot from there. We lock in a weekly, we pivot. That's how it kind of works on RSI. So we can theoretically have that, say for example, that 32.2060 is this line here. We can theoretically pivot below and then pivot back up. And what happens is this line eliminates to here, and then we have that line pivoting here. And then it almost looks like we never actually lost the 32.60, which theoretically we didn't ever lose the 32.60 because the momentum never went negative. It canceled out, it closed positive. So that is something to keep in mind. Don't just be like, oh, it's lost it for a second, we're gonna crash. It's not how it works, okay? But let's zoom out again. RSI, we can draw our trend lines in. So obviously, and for everyone who knows the channel, everyone's been watching me, I think the fake out was that top. I don't believe that we topped out in November. I believe that was a blow off top. I believe it was a fake out. I believe it was overextension, completely manipulated. The top was in fact here, okay? And the RSI actually confirms that was the top. So simple as that. We do have our downward trending support, and this is our, obviously our wedge formation. And we can draw that one in over here. That is our descending wedge. And we already know descending wedges are bullish. There's no doubt about it. Descending wedges are bullish. We are going to go up eventually. This structure will flip. We are nearing the end of the bear market. This is like, this was essentially where we entered the bear market. This is bear market territory. We don't have a lot of area left. We are more than halfway through the bear market at a bare minimum. If we continue past, we create a new low, we are still more than halfway in my eyes. We will enter a bullish phase, or we'll correct or break that up downtrend, break that bear market when we lose, or when we get over this momentum level, whether we break out down here, where we break out over here. That positive momentum will compel the price to break out of these trend lines, okay? That's about it for today's video, guys. More or less, keep in mind, short term, we're looking bullish. We're looking more bullish than bearish. You're gonna think we're looking bearish here. It was okay. It does look bearish. It looks bearish, but the reality is we have support. We're in a symmetrical triangle. Symmetrical triangle is more bullish than bearish. We have major triggers. We have amazing support below us until we lose that absolute bottom, 17,600. There is zero reason in my mind that I am macro bearish right now. I'm gonna say it. Zero reason why I'd be macro bearish. There are things that concern me that could indicate, or I would say develop into problems. There are definitely things that are concerning the economy that could trigger a collapse. There are world events going on that could trigger a further collapse. The general state of the economic situation, especially with the interest rate hikes, are looking more bearish and bearish and bearish. But as I've already explained, the difference between perceived and systematic risk, perceived systematic risk and actual systematic risk, and how that affects the market movements and why markets will move before interest rates top out and all that kind of jazz. You have to understand that. I recommend going and watch one of old videos where I talk about that one. I can't remember exactly which one it is, but if you go back to my channel and if you watch maybe, if we go back to, this video over here, yikes, I think it's this one over here, 7 days ago. I think this is the one you want to watch. This one will go over all of it. If not, you can also watch, this one here, 42 minutes. This is the one you want to watch if you want all the information on the economy. You want all the information on how Bitcoin's price action moves with the economy. But if you want the most recent one, which takes into factor CPI and interest rates, this is one you want to watch. Anyway, guys, with that being said, stick around to watch the Bitget and become a trader promo. If you're interested in signing up and trading where I trade, and obviously it helps the channel, sign up to Bitget. I really appreciate it. It's probably the best exchange out there for future trading. I've been trading on it ever since around about midway through last year. I ended up leaving Binance for Bitget, but Bitget was just 100 times better. Interface is better, fees are better, liquidity is not as good. Obviously, it's not as a big exchange, but it's growing rapidly. It's probably going to be one of the top 3 exchanges in the next even next year. I think it's already 6 now. It's growing massively. When I started using it, it was 10, and there's a whole range of different benefits and features. But go ahead and check it out and sign up. With that being said, guys, I'll catch you in tomorrow's video. Cheers. Okay, guys, we're going to be taking a quick look at Bitget, and now Bitget is where I personally trade. I highly recommend signing up to Bitget with the link down below. Bitget is probably the best exchange out there if you are a trader. It has a variety of features, and the best things about Bitget are a few things. Number one, it's non-KYC. Well, KYC is completely optional on Bitget. Now, there's a whole variety of exchanges out there nowadays that have gone completely centralized, sharing your personal trading information and information of decentralized governments and different governing bodies. Bitget allows that option to be left to the individual, to the user of the exchange. You can decide to non-KYC, you can decide to KYC. It's completely your choice. Another really beneficial thing about Bitget, and the biggest reasons why I'm sitting here actually recommending Bitget to all my followers, is that it has 0.02% trading fees. All right, this is significantly lower than any other cryptocurrency trading exchange out there. FTX, Binance, could name a bunch more, KuCoin. It is significantly lower, by 500% lower than the lowest exchange out there, Binance. Another big thing, guys, is there's no global restrictions on who can use Bitget. Anyone from anywhere can sign up to Bitget and get access to the entire exchange of all the tools, whether it be futures or spot. No matter which country you're in, you can use futures and spot. If you're in America, for say, and you want to get access to more spot trading pairs, such as Binance Global, and you can't sign up. Well, guess what? They've got 250 different spot trading pairs here on Bitget to get access to, and you can get access to all of these. If you're in Australia and you want to access the futures market and you can't trade futures, you can do it here on Bitget. You can get access to the future market and start trading with leverage. And finally, guys, if you do want to sign up to Bitget, go ahead, click that link down below to sign up to Bitget, and you'll get access to the reward center over here, which enables up to $4,000 in rewards by completing 5 tasks. All right, guys, we'll get back to the video. Thanks for listening to that. Okay, guys, I want to take a quick moment to introduce the Become a Trader course at the end of this video. This course was designed by myself and Wolves of Crypto. We put together a whole variety of knowledge to create the most cohesive, understandable, and beneficial trading course there is on the market. If you're interested in learning how to become a trader, if you're interested in learning how to use technical analysis, if you're interested in learning how to apply market analysis to different cryptocurrencies, this is a course for you. We teach you everything from the fundamentals, the basics about what cryptocurrency is, how to trade cryptocurrency, mastering the craft of cryptocurrency, diving into a whole range of technical indicators, market structures, and teaching you how to utilize these when finding trades and applying risk management strategies to become more profitable over time. We even dive into market psychology, human psychology, and provide a variety of different videos and educational content, including courses and quizzes to assist your learning along the way. If this is something you're interested in, guys, go ahead and contact us down below at the cryptoacademycourses@gmail.com. We'll send you an email back with all the course information, the structure, the payment details, and everything else you need to know. That being said, guys, I hope you enjoyed the video today, and we'll catch you in the next one.